Rod Taylor, who's standing here to my right, and he is the founder of Fintech Austin and Scipion, and we're going to let him and some of our other sponsors talk for a few minutes before we start off our panel.
This or any other room. All right, before we get started, I do want to give, I had out a bunch of thanks that we want to thank. First of all, I want to thank Eisenhower's for having the event here. Great job, Eisenhower's. Second year in a row. You are on the FinTech map. Obviously, I want to thank Yodlee. Yodlee put all this work together for us. I'm going to talk a little bit about bostonfintech.org. I'm going to tell you a little story. I work for a company called Scipion, and Scipion is a fintech company headquartered here in Austin, and we automate, hold on, you're going to get excited about this, we automate regulatory requirements. That's the least sexy shit you're going to hear all night tonight. So they wanted me to go first. But it's a big market, and oddly enough, in a weird way, it's a very, very fun place to be. So at Scipion, we were sitting around Brandon Smith, the founder of Scipion and the co-founder of Austin FinTech, along with Emily Roccagiani with Microventures. I don't know if she's here now. But anyway, we're sitting around, we're saying, oddly enough, this is too small of a community to be siloed the way it is with regards to FinTech efforts. We know there's a lot of innovation here, great problem solving. In fact, I think the world knows Austin leads, well, the world in innovation and problem solving. It's got the best technical talent available anywhere. And so we said, let's tear down the walls. Yeah. So let's tear down the walls and start building a community of financial service technology companies here in Austin, and let's get it recognized. Our goal is to make it one of the top 3 FinTech hubs in the country. With the sponsorship and the support we've had so far in less than a year, I have no doubt in my mind that we're going to go ahead and achieve that. So, yeah, good on you. Thank you, Austin FinTech supporters and sponsors, for all of your support. We've got a lot of big things coming up. So anyway, we were sitting around and we went, okay, let's go ahead and tear down these walls. We started making some calls. We started having some meetings. We got some important people together to again, and you're going to hear this time and time again, you bring the leading talent and the leaders in innovation and problem solving together, you're going to do some wildly cool things. And that's exactly what Austin FinTech is all about. Real quickly, before I hand it over to the sponsors, our mission is, number 1, to be thought leaders and be recognized in the country as one of the top FinTech hubs. Number 2, we want to provide resources to startup and emerging companies in the FinTech space. We want to provide administrative assistance, legal assistance. We want to make connections to the financial services community, banks, broker-dealers, insurance companies, doesn't matter. We want your sponsorship, we want your membership, and we'll help you get those types of connections. Thirdly, we want to provide a portal to allow them to showcase their products, their solutions to the greater FinTech company, pinning it up in front of the Schwabs, the Barclays, and a lot of the other big organizations, and give you a platform, again, to showcase what it is you do and the technologies that you're providing for financial services. And there's a lot of fantastic group. Matter of fact, Brad trying to kick my ass if I didn't give a shout out to Draft App. So I got to give Draft App up. Yep, let's hear it for Draft App. So with that, back to the sponsors.
All right, thanks, Rod. Let's hear it. All right, so next up is Trey Robinson, VP of Marketing for Charles Schwab.
Thank you. So just a couple of comments, notes before we get started. I don't want to stand up here and take up a bunch of time. But for those of you that don't realize, Charles Schwab has a large technology presence here in town. We actually employ 1,100 people today, and we're bringing another 900 jobs to Austin. And so for those of you who question Austin's FinTech hub, Charles Schwab is committed to that hub, and we will be one of the more large sponsors and employers here in town. We'll be behind the domain in a very nice facility, and we are looking forward to working with all you guys. The last thing that I will say about Charles Schwab is most people think of Schwab as a old school financial services company. But last month, Fast Company named Schwab one of the top 10 most innovative financial services firms in the nation. And part of that is just our commitment to the startup environment, our commitment to making sure that we innovate on the client's behalf. And so I ask you guys to reimagine the way you think about Charles Schwab in terms of an employer as well as a service provider for you, because it's not the Schwab that you knew before, and we're excited to be part of the association.
Awesome, thank you. Ian Asbell, Director, Auto Tourist. Sorry about that.
Hello, everyone. Okay, so you don't know me, you don't know my brand, and I'll tell you why. So my name is Ilan Asbel. I'm the CEO of a company called Autochartist. As you can hear by my accent, I'm fresh off the boat out of Johannesburg, South Africa. Actually, that's the headquarters. From Johannesburg, we service about 100 or more broker-dealers around the world. We service about 250,000 retail traders, trading on all types of exchanges, forex markets, exchange-traded markets, futures, stocks. From South Africa actually is really where all our operations happens. And the value proposition to the brokers is quite simple. What we do is we say we're going to try and maximize the revenue you get from your broker-dealer, from your retail traders. We do that in a number of ways. One is we walk the retail traders, certainly the novice traders, through a process of identifying trading opportunities and setting stop losses and take profits, through to giving the brokers sales tools to help their 20-year-old sales representative actually sound like a market experienced investor. So lately we've released actually an algorithmic trading firm where we actually provide retail investors with automated trading systems, primarily in OTC FX, soon to be expanded into stocks and futures. And the reason actually you don't know my brand, but hopefully will in the future, is that we primarily do business in Europe, UK, Eastern Europe, Russia, Asia Pacific, Japan. Now that I'm in the US, maybe we'll do business together. Thank you, everybody. Enjoy the show.
Excellent, thank you. Okay, next is Bruce Milne, I think. He'll clarify. Executive Vice President of Socialware.
Thank you very much. Yeah, it is Milne. Thank you very much. I'm with Socialware. Our job is to take the risk out of social media for financial services companies, which if you're in financial services, you know that that's a very difficult task because there are lots of rules apply to advertising and how they interact electronically with their customers. So that's what we do. We're a software company based here in Austin. Most of our business is in New York and St. Louis. But we are looking for engineers. We are looking for architects. We are looking for salespeople. We're looking for anybody that can help us grow. So if you're looking for an opportunity to come to Austin and stay, come and talk to us at Socialware. Can I get a show of hands of who's from out of town? Out of town. So a couple of key tips about how to survive South by Southwest. First tip is book yourself 2 events for the day and let the rest of the day roll, because you won't get to all of them if you try and book too much. So just take on 2 and then just let the day happen as it will. The second tip to surviving South by Southwest in Austin, Texas, the meat coma is a real thing. Okay, so if you go for barbecue, you eat too much barbecue, you will not get up the next morning. So I encourage everybody to try the barbecue, but take it in moderation. That's it for us. Thank you very much. Enjoy South by Southwest. Come and see Socialware if you're looking to come to Austin, and enjoy your time here. Thanks.
Thanks, Bruce. All right, Jeannie Palmer, VP of Talent for Credit Karma.
Hi everybody, my name is Vergini. I head up talent at Credit Karma. Maybe you've seen some of our quirky commercials out there. How many of you know your credit score right now? Show of hands. That's pretty good. Well, it's Credit Education Month, so please check us out at creditkarma.com or download our iOS or Android app. Definitely, it is 100% free. There's no gimmick. Also, we are hiring. In 2013, we're about 40-ish employees. Now we're at 280, and we're going to get to 500 by the end of the year. Over 50% is engineering. We have a ton of interesting, challenging problems to solve. So we'd love to speak with you today. Our recruiting team is here. All of you guys raise your hand. We have engineers with us as well. We have a huge presence. Thank you, Yodlee, for having us. Amazing perks, benefits. We're also on best places to work this year on the list. So yeah, please come talk to us. Thank you.
Awesome, Virginia. Thank you. All right, now Tony DeLipi, co-founder of BitPay. BitPay is also the sponsor for our rock, paper, scissors Bitcoin Battle Royale that will take place later on this evening.
Yeah, thanks. Good afternoon. My name is Tony Galippi. I'm from BitPay. We do cool stuff with Bitcoin and blockchain technology. So if you know what the heck that is, then come talk to me. I happen to have some Bitcoins on my phone, and this location is really interesting because a couple of the restaurants on this street actually take Bitcoin. There's a little taco truck about 3 houses down and a donut bar across the street. So I'm going to be eating donuts and tacos for the rest of the weekend because I like to spend Bitcoin.
Yes. All right, let's go into the panel. So I'd love all the panelists to come up and get mic'd. Before we get going, I just want to say wow. I mean, wow. Fintech is exploding. I mean, I think that's actually an understatement. Last year, we were always quoting the number of $3 billion in investment in 2013, which is X amount of times bigger than 2008. Well, guess what? 2014 was $10 billion in global investment. Q4 alone was $3 billion. And depending on who you talk to, it looks like we're going to be on track to hit around $19 billion this year. Any of you guys reading the news about stealth company 21? Bitcoin company, they got, I don't know, 116 million from Andreessen Horowitz. I mean, I just want to say, wow. So why is all this happening? I mean, what's going on here? Well, there's still big problems and lots of pain going on in this sector. Mobile is pushing, millennials that have a lot of money are pushing. And, you know, the other catalyst, I think, is APIs, which brings us to the forefront of our discussion. APIs are opening up, making it easier for developers to build cool stuff. Nimble companies pushing on the institutions with solutions, small business lending, peer-to-peer lending, wealth, transferring money overseas. All this stuff is being disrupted. It's pretty exciting. So anyway, without further ado, what I'd like to do is introduce our panelists. I'll let each of them introduce themselves, starting with Stefan at the end.
My name is Stéphane Dubois. I'm CEO and founder of Xignite. And what we do is financial market data APIs, essentially powering a lot of other fintech platforms. And we've been doing this for a long time, so it's nice that it's finally showtime.
Yes. Okay.
My name is John Miner. I run product and marketing for PayMe. We're a cash transaction network. We service the 20 to 30% of the U.S. who don't have a bank account and prefer to pay with cash. And we have an API that we're excited about. I'm Jonathan.
Yeah, this will be a little bit better. My name is Jonathan LeBlanc. I head up global developer advocacy for PayPal and Braintree. So we focus primarily on the payment sphere around developers. So focusing on everything from the payments that power companies like Uber, Airbnb, focusing on bill splitting through Venmo, and really all the entrepreneurship that you get through the PayPal APIs and developer products.
My name is Danny Batte. I'm the Director of Operations at Cabbage. And Cabbage is a B2B lender. Our stick is that we can lend somebody up to $150,000 onto the process in about 7 minutes.
Great, thank you, each and every one of you. So what we could do maybe is, I think some of you spoke a little bit about what APIs you're exposing, but if you could touch on that. Okay, so if we could go back and talk about what APIs you're solving, what APIs are opened up and what problem you're solving, and touch on your business model as well. I think that would be great for the audience. And we're going to start with Danny this time.
So we have mainly big three APIs that we focus on. We have a pre-call API, we have a funding API, and then an investor API. So the pre-call API is mostly focused to our partners. So any vendors that want to actually try to see if they can lend with us, they send our customers through that pre-call API. It's a public API available for all our vendors who want to kind of integrate with us. The next API we work on is the funding API. Funding API is actually a private API. It's the API we use to underwrite, make our underwriting decision model. So based on our site, once you log in and you work on your qualifications, what we do is we add multiple channel streams. That API focuses on underwriting that and using our model to determine risk and the interest rate or rate according to that risk. The last one is the investors API. This is a public API, so that when we look for our rounding funds of investments, we actually kind of show the investors what we do here at Cabbage in a public format, so they can actually see and apply some of their business practices against that API.
Perfect. So the developer products are very extensive within PayPal, Braintree, Venmo, but let's just touch on a couple of the main ones that a lot of the developers will primarily work with. So on the PayPal side, a lot of our main focus is around our REST API structure, so that will enable direct credit card processing, PayPal processing, invoicing, things like that. So you're going to get pretty much the entire suite of tool for really building out a payment processor through that. Through Braintree, you're going to get definitely the integrations on marketplaces for doing things like Uber transactions, where you have multiple different people who would be working under you in kind of like the cars versus overarching company. Then the direct credit card processing on that side, mobile payment side, and then Venmo definitely on the bill splitting aspects of the API. So those are the main concepts that you would typically get with a lot of the developer products throughout these main three companies.
We have a host of APIs, as was talked about here. Instead of a credit card processor, we're a cash processor, which means that the percentage of the U.S. who can't pay with a credit card or bank account who can pay with cash, we're like a cash transaction processor. So we have APIs that literally drive our whole business. The most easy example is you can call into us and get a barcode back that someone can actually walk into a 7-Eleven or a Family Dollar and make a cash payment. So instead of a user being in an e-commerce checkout flow and providing their actual credit card, they actually get back a barcode, they walk into the store and they can make a payment. We let the end consumer through our full API go through our end-to-end flow, and we provide that back to all of our businesses.
All right, we have market data APIs, and we have more than 1,000 of those. We cover, market data is the lifeblood of finance, and we cover different types of data. We cover every asset class, equities, funds, bonds, Forex data. We have real-time data, if you want to get snapshot information, to integrate that in an app. We have that. Delayed data, historical information, reference data. We are the largest collection of REST APIs designed to deliver financial market information. Our business model is very simple. We just sell the data. So it's a subscription model. You buy a certain data set. If you need some equity data, some bond data, some historical data, you just license it, and based on who you are, you're going to pay something different. If you're a startup down the street on 6th Street, we'll give you a special discount. If you're a big bank, you'll pay a lot more money for the same information. So it's a very straightforward model.
Okay, and we're talking about building a API audience, so I think it makes sense to kind of go right into that developer, right? And so, at Yodlee, we're working on creating an awesome developer experience, right? And there's a lot of lessons learned. And what I thought we would do is, what do you guys think it takes to build a ecosystem with developers that are delighted and become advocates in this daunting fintech world?
So I think the first thing is security. Without security on the API, it's hard for senior leadership and developers to get behind the product and to start exploring it if we don't have the guide and the security around it. The second thing I would think that would be a focus was actually documentation. So APIs have to have really good documentation, I think, and as well as being able to have a sandbox environment, a really robust sandbox environment to test. Developers would love to kind of get in the sandbox with the right documentation and be able to kind of see what that API does, right? To really determine whether or not it's robust. And the third thing is, of course, since I'm in production operations, is to support tools around production operations. Ensuring that the APIs and how we implement those APIs, we have the right, when something goes bump in the night or something happens, we have the right monitoring and right solutions around to kind of get that back and running as it relates to the API.
There we go. So quite honestly, I think the one thing that it comes down to for our team and how we built our entire team is you just kind of have to give a shit about your developer audience. You have to be in the same situation that they're in. So flashback 3 years ago when our team was first started, when we first started building it out, we had products that were released. We didn't have the developer outreach that was there, and a lot of the community started floundering. We hired people into our team that actually cared about building up the industry, cared about actually building out a developer presence because we were all engineers ourselves. So as we built that, we started engaging with a lot of the communities and really just trying to give back wherever we could. So whether that be through the developer communities, through the conferences, through just outreach with small companies, that's what we've attempted to do. But at the exact same time, engaging with the community doesn't really matter unless you're bringing something back into the company. So what we've created is almost a pipeline between external developer audiences and our internal engineering systems. So the vast majority of the products that we're building out are architected directly off of developer feedback. So as we're engaging with the community, we see what the pain points are, we see what the issues where they're going through, we see what they want, and that creates the products that we're going to build out tomorrow. That creates our entire pipeline of development. So quite honestly, what it comes down to is just caring about the community that you're building around yourselves. And to me, that's the most important part about building a developer community.
I would agree with both of the comments they made. For us, it's a little bit different. I mean, the most important thing for our developer community is on top of what they've said, is to make life as easy as possible for developers and what's in it for them. We live in a world at PayNearMe, again being a cash transaction network, where sometimes the other end of who's listening is not as real-time and dynamic as people in Silicon Valley or Austin find fintech may be. So we have to actually help our developers actually piece together the final hurdle there. So we actually have to help them do that heavy lifting. We have found that there's nothing better than giving them dynamic tools. Even though documentation is great, they often don't read it, so we try to give them as many tools as they can, code snippets, and just really jump in where we can. And I think that the point about feedback is right on. We do have a product team, and our product team is focused on getting this right, but when we develop something on the API side, if our engineers can't get through it, then we have a problem. So we ask them for their feedback, and that's a really important piece.
Yeah, I would agree with that as well. We do compete with existing providers that have been around for 150 years and who have legacy technologies. And so for us, the big differentiator is ease of use. It's 100% about ease of use. And obviously that means documentation tools and things like this. But it means also designing APIs that are going to be intuitively, really intuitive to use. A developer should be able to look at it, not even have to read the documentation, and be able to build something within a few minutes. And just like it's hard to build a good website, you can have a website that's bad. I think you can have good APIs and bad APIs, intuitive APIs, not so intuitive APIs, and the whole adoption is really focused around the ease of use.
Yeah, I agree with all of that. I mean, I think at Yodlee, we really are working hard to make those documents easy, and an area to test sample code and all the different languages that developers use because it's fragmented. So I mentioned earlier the fact that there's a lot of areas being disrupted, right? The open APIs and all the investment, all the things pouring into the sector. So I don't know, small business lending, peer-to-peer lending. That's a lot of companies in that space. What other areas are you guys fanatic about, or you think is not only being disrupted now, but will be disrupted in the future, looking over the next few years? I don't know who wants to take that first.
I want to tie into this one. There's two main areas that I think that are ripe for disruption. So let's start with the technology side. Identity sphere, username and password as they are now, incredibly insecure because of really just the user involvement step. If you look at top 10,000 passwords that are used day to day of the leaked passwords, that accounts for 99.8% of passwords used overall. ridiculous insecurity. So what you're going to see, and what you're already seeing now in the payment industry and the financial industry, is taking a look at biometrics, a lot of biometrics feedback, in order to provide an alternative identity source. You're seeing this with vein recognition technology. You're seeing it with heart rate identification technology. There's a lot being done around retina scanning, etc., beyond the fingerprints. So that's one of the areas that I could see. The other area that is just going to explode in the next, I'd say, 5 years is a complete reinvention of the banking industry. So let's look at the industry right now as it is. 53% of the global population is unserved. Unserved, underserved. So that means they don't have a bank account. They don't have access to traditional banking facilities. And as a lot of us know, the less money you have, the more costly it is to work with the banking industry. So this area, 53% of the population that's really not tied in with a lot of the innovation that's happening, it's massive. And we would think, well, what's the way to get through to that industry? And you look at some of the traditional ways that we have mobile development, we have web services, etc. But if you take a look at the underserved population, let's take the US for instance, and you look at mobile phone usage, you would think that among the unserved and underserved population that the mobile phone usage would be lower, especially the smartphone usage, right? Well, actually, it's higher on average than the actual mobile phone usage amongst the served population, the banking, and those with banking accounts, those with credit card. So this is a way to hit that market, to begin hitting that market. And this is the same globally because we have more active cell phones in use than people in the world. And if you actually put phones in the hands of people, so if you have the number of phones that are in the hands of the people are more than people actually have toilets in the world. It's a massive statistic. So between biometrics and feedback, stemming from a lot of the medical industry, and then jumping into the banking industry, those are two areas which I'm incredibly excited about and think are going to be massively disrupted in the next couple of years.
So I obviously would agree with your first statement about banking. Banking is in a whole realm ready to be disrupted, and it's already happening. Obviously, folks who have smartphones and are penetrating over the world. But I think the other one I'd comment on, which is a little bit in the Bitcoin realm, which is remittance. The whole business about remittance and how you can pay someone internationally, how you can pay someone even from a peer-to-peer perspective is a big to-do these days. And all of the access around what's going on, most notably with Bitcoin, really changes the game for traditionally how folks can send money from either state to state or across country, and I actually think that can actually be a big thing.
Thanks. Given what we do, we tend to be a little closer to the capital markets than we are to the banking world or the remittance world or those. So what we see is really the world of financial advice being completely turned upside down over the next few years. And I would say companies like that I would call the poster children of fintech, like Wealthfront and Betterment and Personal Capital, who are just today managing a few $1 billion, are just scratching the surface on what could happen to the financial service industry. And it's been going on for a long time. Back in 1999, all the banks thought the internet would change the world, and none of that happened. And now you have the large financial organization in New York, in London, running scared with these new business models where people are using APIs, whether they're market data APIs or trading APIs, using mobile, and using automation of advice to essentially capture this population, today and tomorrow, and potentially completely disintermediate the type of advice, personal advice, people-based advice that they've been doing. And I think over the next 5 years, 10 years, you're going to have a whole new chunk of the population who's going to be getting financial advice and financial transaction from mobile devices provided by fintech companies instead of going to Goldman Sachs or JP Morgan or something like this. So that is definitely the core of what we see happening in our segments.
Really nothing more to add to all that. It's basically the banking side. I think is going to be something that's going to be something to look out in the next few years. In the basic brick and mortars in your banks, your BOAs, your SunTrust, the big banks, they're struggling to kind of keep up, right? And the speed at which they do is something that I think is going to need to improve, right? And you start seeing that happen now with that space moving into the mobile space. The checks that you can actually slap now and cash checks on your mobile space. But being able to do that and being to advance that, I think that's kind of where, personally, I see kind of the innovation going, is whether or not those big banks and environments like companies like ourselves kind of driving and pushing forward that innovation.
All right, so if you were a bank, what would you do?
Embrace it fast. I mean, it's just, there's so many companies out there that you can point to these days, whether it's Bank Simple or GoBank, or there's companies that are just trying to disrupt the entire space and make it so millennials and others, that's what they're used to. I mean, most of us don't go to branches these days. So the most you can do is embrace it and run fast. And if you resist it, then you have a serious problem.
They have a big problem because they have a fundamentally different cost structure than all these new companies, right? We talk about brick and mortar, we talk about, like in the world of financial advice has always been about relationship. It's about having advisors in the field, Schwab, I think they're a sponsor, I hope they're okay with what I'm saying, but it's having an office downtown talking to advisors. They launched their new product today, but it's going to be about automation going forward, and automation means that your cost structure, because using the cloud, using API, it's fundamentally different. And so you can embrace it, of course, but I think you're going to have to look at your guts and see how much you need to get out, and how much of your business is going to go away as a result that needs to be completely re-engineered. For us, we found it's great because for a long time we had our solutions, and the big banks weren't necessarily paying attention. They were focused on regulation, cost cutting, and now they are afraid that Silicon Valley or Austin or New York, the startups there are going to take them out of business, and they're very much paying attention.
I actually love having this conversation about the banking industry and how it's going to change. If you look at other industries that have been permeated by technology, like this high tech, look at Tesla, for instance. A lot of people have said they're trading like a tech company, not a traditional automotive company, which is kind of amazing. And just look at the massive innovation that they've built into the automotive industry. Now take that into banking, and you're seeing the exact same trend with high tech really building into this. You have a whole slew of startups. You have Bitcoin coming in. Different cryptocurrencies. So taking a look at that, different biometrics. All these different high tech aspects that are coming into the payment sphere that are going to disrupt it extensively in the next couple of years. We all know what the flaws are within the banking industry, and what's going to happen is there are a lot of companies that are going to go after it, especially because there's a massive missed market, and there is a massive amount of people that they're just not serving, that they just don't work for, that just don't want to be a part of that industry. So, just like you said, they need to move fast, they need to innovate, but it's not just a matter of adopting new technology, it's a matter of ripping their guts out and reinventing who they are. Just like a lot of companies have had to do, just like technology companies are completely used to doing, just ripping yourselves apart and rebuilding based on what your customers need.
Yeah, I think to sum it all up, right, speed, right? It's all about speed now. New generations doesn't wait. They don't cast a check at a bank, right? They don't pull up to a drive-thru mainly to get money. Everything's plastic. Everything's kind of with your Apple Pay. You don't really do much with kind of the physical currency anymore. And that model of the whole brick and mortar, the banking system, as it relates to the cabbage, our lending platform is different, right? So we don't have to worry about focus too much on this credit score, right? Which most banks do for small businesses. In our B2B space, we aggregate the data using APIs and reach out to our partners like PayPal and get information from these channels to make a more conscious decision, a more educated decision about our customers, so that the customer who's starting up a small business and really is the capital, but they're maxed out on their credit cards, that doesn't tell the whole story yet. The whole story is actually more than that, right? It tells you more about, okay, what does it look like in their sales? What does their revenues look like? How much transactions are they making? Those things tell a better story. And I think from a standpoint of the bank, it's, these companies have been around for 100 years, right? And they're stuck to this model. And that model, as it relates to not only how they do business, but how they do the credit modeling, it has to change. I think if not, companies like Cabbage and companies that innovate will constantly continuously push the bar and allow people to qualify for money without having to go to a bank, get a loan, and look to their account without changing out of their underwear, right? So from the banking standpoint, I think that's something that will grow.
All right, so all of this tech and open APIs give developers easy access so that their life cycle is shortened. So they go from concept to actual production products really, really fast, which is good. But it also opens the threat of commoditization in all of our businesses. So what are you guys doing to fight that, and what's your opinion on that? What kind of value offerings are you looking at to not operate in a commoditized world?
So commodities, I think it is a commodity, right? Open APIs allow for anybody to do what you're doing. But the commodities, I think, more like a building block, right? So the commodities help you build basically a block that builds a house, right? But that foundation is tied to that commodity itself, that open API. The open API allows you to kind of tell a story, like we're doing, obviously, with Cabbage, but to build a story about that customer. And we do that everywhere, right? On the B2B lending side, on the space, we do that. Retail environments do that. The Zillow companies like Zillow do it. So although it's commoditized, I think there's a level of sophistication that we've done when you kind of put more together and tell a story about that with that solution.
I think when you're looking at the fear of commoditization overall, really what you're looking at is you have a whole bunch of APIs that do the exact same thing. Typically, your consumer is going to pick the cheapest one, the cheapest option. The developer APIs, sure, you'll have a lot of the same features running through with a lot of these companies, but I think what it comes down to is being a company that builds innovation and listens to its developer audience. So when you have developer products, open APIs, what you have to do is continually be giving back your developers something better, something that's newer, more innovative, something that's building on something that they don't even know that they want yet. And that's where these developer products, these developer outreach programs are so important, so valuable, is because they are really building the lifeblood of the future of the company. If a company's not continually innovating, especially in the payments and technology sphere, they're just ripe for complete disruption and destruction. So that's why I think what it just comes down to is continually innovating on top of your APIs, building onto your developer presence, and caring about your developer audience.
Yeah, I would say commoditization takes time, but when you see it coming, then essentially, thanks, you should be running faster to figure out what you can build on top of it. I think those are the comments we've heard here. If you look at kind of just the payment space as a whole, which was talked about, it's going to happen, so therefore, from our perspective, be able to build on top of that and think about what's next before others think about what's next is what's really important. We want folks to embrace what you're doing and at the same time be several years ahead of what's about to be commoditized, otherwise you have a problem.
It's an interesting question. When we started with our first APIs, which was like 10 years ago, we had this vision of just putting APIs online, let people try them, open documentation, open free trials, slide a credit card and buy it. And it worked okay. But we stopped doing that. We took the pricing of the website, we took a lot of information out of the website, and we found that it actually really accelerated our business. And so it was counterintuitive. It's like, hey, our vision was a little different than that. And we found out that, well, the people who are looking for those APIs, they're actually trying to solve some complex problems. They don't necessarily understand the world that you're talking about. Market data is a very complex world. You have to sign agreements with exchanges and things like that. And they don't know how to do that. And so we had to kind of evolve to become a lot more consultative around how do we help somebody build a business? How do we help somebody make a successful product and become more of a, again, provide services around that. So you still have products, you still have the documentation, you still build things and technology and innovate, as you were saying, to allow them to build new things. But I think your DNA changes a little bit, where you really help companies succeed. And that's how you avoid commoditization, I think.
I would just like to add, at Yodlee and the Interactive team, we definitely really are taking pride in helping our companies succeed. I mean, have our own incubator. We also have programs to help some of our customers do more co-marketing and other areas. And we think that's a really big area to excel in, to help fight that commoditization that is somewhat inevitable. So I definitely would agree. So it's getting hot up here, and I'm betting a lot of you guys have questions. And so I'm just going to ask one last thing from the audience in spirit of Danny's words and our upcoming rock, paper, scissors contest, Bitcoin and cryptocurrency. What do you guys think about that? I mean, I just mentioned 21, the stealth company, just got 116 million. I mean, it seems to be going crazy. We've got a Bitcoin day on Monday. What's your opinion about all this?
Obviously in the lending space, Bitcoin is very volatile, right? The amount of regulation around Bitcoin from a cabbage standpoint, right? We're really going to kind of see what it looks like, how it manifests in terms of in the industry, and how it manifests in the banking. The volatility, of course, like I said earlier, is something that is concerning, right? From a space standpoint, and also be able to track the currency as it is, as well as of course the regulation.
So most of the developers on my team have been following Bitcoin and different cryptocurrencies like Litecoin, Dogecoin, other coins in the industry for quite a while, and seeing the changes in the industry. And we've seen it come from a lot of tumultuous relationships, a lot of tumultuous products, a lot of issues with hacks. But we've also seen a lot of wallets building out that, a lot of security being built around the products. And that is actually giving a lot of stability back to the product. Where we're seeing a lot of the growth is when you have a consumer-based product on top of, or consumer-based present on top of Bitcoin, you're really going to see a vast majority of the reach come out of it as a global currency. It's exactly the same reason why we've integrated it within Payments Hub, within our PayPal products, why we've integrated a Coinbase and other Bitcoin wallets within our products, as well as in our V0 SDK within Braintree. We have Coinbase integration so that you can use that as a funding source. It's because our merchants asked for it. It's because our customers asked for it. So there's the ask coming out for it that people actually want this. And I think we're just seeing the beginning stages, and when you start to see the consumer market being hit a little bit more here, as well as just building off the developer sphere, that's when you're going to see it come out as a real, true global currency. And as you're starting to talk about the breakup of the banking industry, Bitcoin cryptocurrency is the ideal way of hitting the unbanked and underserved population of the world. So those two markets and the innovation and disruption that's happening in the financial technology sphere, it's all going to be tied together, and Bitcoin's going to be one of the major players in that space.
Yeah, I mean, Bitcoin obviously is the big thing going around, whether it's crypto or Bitcoin, not 100% sure which winds up winning, but to the point about underbanked and what's going on there. But if you think of the fact that the underbanked and the rest of the world is always just gouged from a price perspective, and you think about the fact that you can use something like a cryptocurrency to send funds, which we talked about before, to friends and family overseas or internationally, and not have to pay out the fees and what goes on there, it's a huge advantage and can totally change the industry. I think some of the comments here today, which were really about payments companies and crypto and folks who are just embedded with respect to years and decades of being in payments, if you look at it from a technology problem perspective, you look at it with a different lens. And so if you can figure out a way to actually solve the problem with respect to actually using crypto to solve some of the common scenarios, then it will be a huge advantage.
I'm not a Bitcoin expert, but from where I stand, and I probably talk to 5 new fintech startups every day. It feels like we reached the top of the hype with Bitcoin about a year ago, and that we've been going through what Garner calls this the valley of disappointments, or something like that. And maybe we are now getting to a stage where technology is maturing, the expectations are realigning, and we're going to start getting some real value from it. But it feels that it's certainly not what it was a year ago, and it has to reinvent itself. Having said that, if we need an API for a Bitcoin rate, we have one of those.
All All right, for some reason we're all wearing dark shirts and it's hot. So we're going to spend about 10 minutes if there are any questions. What I'd like, if you have a question, to kind of come up here and ask it. I don't know how else we'll hear you. So any questions from the audience? Here comes Chris Chen.
What role do you think the banks will play in about 10 years? Like, what does the future look like for you?
That's a good question, right? It really depends on how they adjust, right? It's an adjustment factor. Being able to, previously working at a Fortune 100 company in the bank industry, people have seen here, they turn very slow, right? That ship turns very, very painfully slow. And that I think is the crux of the problem, right, for them. Being able to turn that around faster will be will tell you what it looks like in 10 years from now. But on the other hand, right, their access to the capital, the interest rates in their capital, right, the ability to lend at the rates they lend at, because they are just a huge conglomerates, allow them to give that. They're still in the game, if you will, to do that. So I think as you start to see some of the technology inside the mobile, on the banks inside the mobile space right now, they're seeing that people are trying not to go to the banks, like I said earlier, and they're trying not to kind of deal with people, right? We just want to get going and do it on the train or do it when we get done. They're starting to do that now. They're slow moving, right? And innovators in this field are constantly pushing the bar to get them to get to where they are.
So if we look at this, from my sphere of knowledge on when you look at really PayPal, look at what PayPal was for a large number of years. They were one of the only games in town, right? So they were, they were taking a lot of the complexity away from the banking industry about working with these payments end to end. But they weren't innovating on a lot of their products for a while. We had developer APIs that were SOAP-based, using developer identity systems that were the same for years. And it wasn't until a lot of startups started coming in and innovating in the sphere that they realized that they had to innovate as a company. And it's the entire reason why our team even exists to begin with. Why any of us really wanted to join there was because they were starting to disrupt. Why they were starting to completely change the fabric of who they were. It's the exact same thing that's going to happen in the banking industry right now, is because they're going through this same identity crisis. You have a lot of people who don't use banking facilities for different reasons. So you have people who just do not trust them overall because of previous experience. You have people who come from cash-based societies. I mean, you look at Russia, for instance, incredibly cash-based. So working around that industry or that area and working around the populace there, it's other challenges. And you have other people where language is a barrier for opening a payment account, or simply just their credit, not being able to open anything on that side. So in order for them to disrupt, what they have to do is change the fabric of how they're working. They have to change the fabric of how they're engaging with their customers, and really changing how they're making money. Because right now they're making money off of their top clients. That's where they care. That's where they want to care and want to build upon, and that leaves a huge portion of the population in the dust. So that's where they're innovating.
Let me again talk about the capital market side instead of the retail banking side. If you think about investable assets in the U.S. today, it's about $12 trillion. If you look at everything under management, it's about $40 trillion. If you look at that market, you have most of it that's being managed with the full service brokers. Those guys have been existing for 100 years, right? A huge chunk of it is managed by discount brokers, the Schwabs of the world, who came 40 years ago and created a whole new market, created a new kind of bank, if you will. Then you had the internet brokers, TD Ameritrade, E-Trade, came back in the mid-90s and took a whole chunk of the market, right? So if you look at the market today, it's really divided among those three. How will it look like in 10 years? I think you're going to have a new slice in the pie, and it's going to be a lot of money, and this could be managed by the digital wealth management companies, right? Providing automated advice instead of either self-directed advice like a Schwab or an E-Trade, or a full-service advice. This means that the traditional banks are still going to be there. Some of them may get into that market, but you're going to have a whole new kind of bank, if you will, which are the digital wealth managers.
I agree. I mean, at Yodlee Interactive, one of our largest segments is the wealth segment. I mean, there's just a lot happening there, and definitely agree with Stefan. Okay, are there any other questions from the audience?
As a software developer, there are lots of desirable payment APIs, and a payment is a very simple thing, but every payment API is different. And I was wondering if you envision a day where I can make a payment using the same API across all the payment providers.
Sure. So I think one of the areas that is actually building up quite heavily here to try to build into that industry is the digital wallet sphere. So when you look at digital wallets, for the longest time, they were just about adding a couple of different payment providers. But this is an area that we've looked into quite heavily, where you're actually taking a look at both payment providers, you're taking a look at integration of, let's say, Coinbase or any other Bitcoin wallets. But in addition to that, you start tying in loyalty cards, you start tying in, I mean, take your wallet, for instance. Anything that's in there is ripe for just getting rid of and putting online. But if you're making a payment, you pay through multiple different industries, that's really what you're talking about, is integrating with multiple different series of end products or end sources. So I think one of the areas that's actually really good around the development sphere is when you start looking at digital wallets, because they tie in all these mechanisms through a centralized platform. So you have a centralized API that works with your bank, it works with your loyalty systems, it works with a whole bunch of different payment providers, a whole bunch of different banks. And that's where you start tying in a centralized piece of technology around that disruption.
Okay, that concludes our panel. So I'd like to thank Stefan, John, Jonathan, and Danny. Great job.